Warren Buffett is stepping down as Berkshire Hathaway's CEO, but he's not leaving. On the 1st of January 2026, Greg Abel takes the helm of a trillion-dollar conglomerate, sitting on roughly a few $100 billion in cash. That combination, a new operator, an enormous cash hoard, and Buffett remaining as chairman, could change everything investors assumed about capital allocation, buybacks, and Berkshire's valuation. So what actually changes on day one? And what should shareholders watch like a hawk over the next 12 to 18 months? This narration breaks down the May 2025 board decision that made Greg Abel CEO effective the 1st of January 2026, summarizes Abel's background and style, and gives a practical checklist of what to read in Berkshire filings and which red flags to watch. It also lays out 3 concrete investor playbooks with clear triggers for action during Abel's first 12 to 18 months. Quick note, this is educational content only and not financial advice. Always consult a licensed financial advisor before making investment decisions. On the 4th of May 2025, Berkshire's board voted unanimously to appoint Greg Abel as president and CEO, effective the 1st of January 2026. Warren Buffett remains chairman. That's the headline. But the nuance matters. This was not a surprise. Abel had been publicly named Buffett's designated successor in 2021, yet formalizing the handoff with a fixed effective date creates a new governance reality. The world moves on a calendar, and the 1st of January 2026 is the day daily operational control shifts. That is the day capital allocation choices start to be executed under Abel's direction, even if Buffett stays influential as chair. A unanimous board vote can hide important details. Does unanimous mean full delegation, or unanimous approval subject to specific sign-offs and collar limits? The board release and subsequent communications will be the primary sources. Read those documents closely for delegation language that defines who actually pulls the trigger on large transactions. Greg Abel is not a media-driven market guru. He came up through energy and utilities, eventually running Berkshire Hathaway Energy and then serving as vice chair for non-insurance operations. His track record is operations first, running regulated utilities, focusing on long-lived assets, steady regulated cash flows, and capital projects. Think infrastructure and utility economics, not concentrated, activist public equity bets. Here's the key contrast. Buffett's persona has been one of an opportunistic public equity investor who valued discipline over diversification in his active picks, enormous concentrated stakes when opportunities appeared, and the willingness to deploy cash into big stock purchases. Abel's resume suggests a different default: deploy capital into long-duration projects, regulated returns, and bolt-on acquisitions that fit operational platforms. Which style is better for Berkshire today? Opportunistic public equity buying or disciplined, predictable utility-style investments? The answer will matter for valuation, and it will be one of Abel's first big tests. Shareholders should be attentive from day one to governance and compensation disclosures. Early press reports indicated a material reported pay increase for Abel media outlets. Noted figures in the neighborhood of roughly $25 million for 2026, compared with Buffett's long-standing symbolic $100,000 salary. Press reports are one thing. Formal disclosure in the 2026 proxy statement is the authoritative source. Beyond headline compensation numbers, watch whether pay is cash or equity, time-based or performance-based, and whether there are retention clauses or transaction incentives. Those details change incentives. Stock-based pay or bonuses tied to EBITDA might bias decisions toward acquisitions that inflate short-term metrics rather than long-term intrinsic value. Also, watch for shifts in committee structures. Who sits on investment oversight committees? Who has final sign-off on acquisitions above thresholds? And whether Buffett retains veto or absolute final authority for very large deals. Explicit delegation language in the proxy or any 8K disclosures will tell you who actually pulls the trigger on billion-dollar moves. Berkshire entered late 2025 with an unusually large cash and short-term investment balance. Public reporting of Q3 2025 cited figures around $382 billion. Whether that exact number holds on the 1st of January 2026 is a claims to verify point. The Q4 filings and 10-Ks will show the precise balance, but the takeaway is stark. This is one of the largest corporate liquidity pools in history. So what are the options for that cash? Spend it on acquisitions, return it to shareholders via buybacks or dividends, or maintain liquidity for optionality. Each choice has consequences. Acquisitions would likely reflect Abel's background, utility, or infrastructure M&A, and bolt-on deals that are often accretive in regulated returns. Buybacks or dividends would signal shareholder returns. Buffett historically favored repurchases when shares were cheap. Maintaining liquidity preserves optionality but leaves capital idle, which creates a perception of value destroying and invites activist engagement. If you had $300 to $400 billion to allocate, how would you prioritize? The market will scrutinize every incremental dollar spent or returned. The single most consequential governance question is who has the final say on capital allocation. Typically, a CEO directs M&A and daily investments, but Berkshire is not a typical company. Buffett remains chairman and the largest individual shareholder. The transfer of capital allocation authority may be gradual and documented via formal delegation language. Look for explicit thresholds in filings that state the CEO can approve transactions up to a specified amount, with board sign-off required above that. Or the board might reserve final approval for certain categories such as large public equity purchases or reinsurance commitments. Even if delegation is broad, cultural and reputational constraints matter. Buffett's voice is still loud. Will Abel make a multi-million or multi-billion-dollar move without Buffett's blessing? Possibly, but politically, that could be risky early in his tenure. Expect an initial period of joint decision-making, a probationary window where Abel executes within broad guardrails while he builds credibility. If you're an investor, think of the first 6 months as the proof of execution window. Abel's moves during that time will define market expectations for years. Strategic levers that will affect Berkshire's valuation and shareholders' wallets include buybacks and dividend policy, M&A appetite, deployment into utilities versus public equities, and potential cultural shifts. Will Abel make repurchases meaningful? Will dividends be considered? Historically, Berkshire favored buybacks over dividends, so watch for explicit buyback authorization, repurchase volumes, or any first-time dividend language. Will the company continue to take large concentrated positions in public companies the way Buffett did, or will it become more conservative, preferring controlled operating businesses? That choice changes both risk and reward. Also consider cultural and brand risk. Buffett's folksy public voice and annual letters added a reputation premium. Abel's style is less public and more operational. Over time, that can change perceptions and multiples. Do shareholders prefer predictability and steady returns, or occasional outsized upside that came from Buffett's concentrated bets? The market will price Berkshire based on the path Abel chooses. The May 2025 announcement already produced market moves. Shares dipped as markets priced in leadership change risks. Possible scenarios going forward include stabilization and re-rating if Abel deploys capital accretively, continued underperformance if cash sits idle and buybacks remain minimal, or activist engagement if investors believe management is not acting in shareholders' best interests. Activists could push for buybacks, dividend distributions, or board refreshes. The likelihood of activism is correlated with how quickly Abel acts and how transparent the board is about delegation and compensation. Timing matters. Activists and markets often react to process as much as to outcomes. Slow or vague communication around delegation or compensation will open the door to activist campaigns even if Abel's long-term strategy is sound. Watch the proxy and any early 8Ks within the first quarter of 2026 because those documents will shape activist calculus. Investors who want to stay ahead should build a disciplined reading checklist.